So before I start, I'd like to invite my guests, my panelists. The first one is maybe the earliest investor in crypto and Bitcoin that I know here in Israel, Shohat from Aleph VC. The second is the CEO of the largest exchange change service for crypto and Bitcoin in Israel, Youval. Join us from Bits of Gold. The third is one of the technical leaders of the most promising privacy projects in Israel, Aviv from Qed-it. From Bittax, Lokay Cohen will join us. And Henry from RSK, one of the leading sidechains scaling solutions for Bitcoin in the industry today. So we're going to do this a little different than most panels. We have a little less time than anticipated. So we're going to do a quick overview. Each one is going to get 60 seconds to introduce themselves with their connection to the industry and whatever is relevant for this panel. Aviv, go ahead.
All right, thank you. So I'm Aviv Zohar. I'm 80% of my time I spend as a professor at the Hebrew University studying blockchains and cryptocurrencies. And some of my time I'm also spending at a company called Qed-it, which is commercializing zero-knowledge proofs to add privacy to private blockchains and to interactions with regulators and in other companies. For me, this step into industry is very new. I'm a little bit at awe with the people right next to me, but I'm happy to provide my perspective.
Shohat. I run Aleph, $350 million under management. Been investing for now, moved over to the dark side 10 years ago. Did the first Bitcoin purchase January 2012, so pretty early. The first investment that we've done, that we announced is Kolu. That was the colored coins, the team behind colored coins originally. My interest is because it's a disruptive model to venture capital. Either you adopt it or you get killed by it over time. So we view it as something as step function, so it's interesting to invest in.
Hi, I'm Or from Bittax. Bittax is a system for calculating tax on crypto in a very unique way, which identified the transaction in the Bitcoin you're actually sold. And by this, it's reflected your real activity on cryptocurrency and saves you between 25 till 70% taxes. Bittax is a cutting-edge platform that results not only the right tax calculation, it was approved by the Israeli tax authority, also it patent pending for the method of calculation.
What's your background in crypto, Bitcoin?
What's it?
What's your background? What's your connection to this?
Well, actually, we were just an accounting firm until Gidi, that sits on the CPA's accounting board, was received a letter from the Israeli tax authority asking him to make comments for a paper that you're going to publish. And then we realized this is going to be the next thing that people will need to calculate the taxes in a most efficient way.
Youval?
Thank you. So I'm Youval, CEO of Bits of Gold. Bits of Gold, we're the largest and most popular, I'd say, crypto broker in Israel. We expert in the B2C market, facilitating the purchase and sale of crypto, mainly Bitcoin and Ethereum. We have an OTC desk that succeeds in getting shekels into the Israeli bank account, which isn't that obvious these days. We are known for pioneering the regulatory landscape. In 2013, we worked with the AML authorities to get Bitcoin on the map, and also known for fighting Bank Leumi to keep our own bank account open, not only in the crypto sector, also in the fintech. 2019 is the year that we're going to expand our product worldwide, starting with the European market, and just recently opened, thank you, just recently opened our API for B2B partnerships.
Henry.
Good afternoon, everybody. My name is Sraigman. I'm the head of business development at RSK, the first smart contract platform that is powered and secured by the Bitcoin miners.
So basically we have here 5 different people from 5 different categories in the industry, and the idea of this panel is we're going to talk about what's challenging the industry right now, what are the big problems, and what are our perspectives on how we can find solutions in the way we see things. So I would start, and that's for each of you who's willing to give an answer to that. What is the one big challenge right now? There are a lot, obviously, but what is the one biggest challenge that's facing right now? Let's say crypto. Leave blockchain aside for a second. What's the biggest challenge facing crypto from reaching mass adoption right now?
Yeah, I'd love to take that question, even though Qed-it is not in direct
yeah,
contact
they're
with crypto.
more private, yeah.
Yeah, but definitely I've been having conversations with regulators in Israel, and I've also been studying cryptocurrencies. I think the main challenge relates very much to the debate we've just seen. The main challenge is how to deal with regulation. If you look at what deters users currently from using Bitcoin, it's the high prices for exchanging Bitcoins, it's lack of usability. Most of this is
These
traceable.
are 3 different things.
Yes.
Regulation is one, change
Yes.
is the other, UX is third.
But regulation is the reason for the high price to change Bitcoin into Bitcoins. The reason is that people who change your dollars or shekels into Bitcoins, just like Youval here, I guess he can comment, face regulatory hurdles that are insurmountable. They're going to have little competition. Not too many are going to enter this market to compete with them. They're spending a lot of money on lawyers. They're spending a lot of time with regulators. And if you try to buy Bitcoins in an exchange or in some change, you have to go through this very long and arduous process that doesn't end. And I think this is the main hurdle for cryptocurrency adoption.
Yuval, you want to comment on that? Remember the original question.
Remember what, sorry?
The original question.
Yeah, so I agree. The hurdle would be regulation, but I really believe that the regulation in time will get to a point where it gets it. I mean, we already see in Israel that the regulators are moving forward. The tax authority, the security the security authorities here in Israel, and the EML authorities. Everybody is getting in line with this.
So do you think that's the biggest challenge today?
So I think the scalability is the biggest challenge, and I think once we solve scalability, then the regulators will get there. It's either in Bitcoin or other cryptocurrency, but Bitcoin believer. But I think scalability would be the challenge.
I see Eden once.
I think we're very focused on product and technology. I think the real problem is actually human nature. If you know the Gartner hype cycle, so it starts off with inflated expectations, and then everyone, like, this blows up, and suddenly everyone is sure that this is shit and will never be useful, and then after
Is this
a while,
where we are right now?
yeah, maybe. And then as it becomes, you have the productivity phase. And I think right now, just the negative sentiment around both investors as well as just the general community, I think that's the biggest challenge. It's just humans, right? And it takes a while. So I would caution against that. And I think the regulatory actually is usually not an issue. It's an opportunity. Like obviously, you need to go through regulatory approval or do certain things that allow you to withstand whoever the regulatory authority is. But then as soon as you do that, you actually have an advantage versus rest of market. So many of the opportunities that have regulatory issues, if you look at like utility tokens, Actually, security tokens are, once you cross that hurdle, and if you do SEC registration, it's actually an enabler versus inhibitor. So yeah, regulatory is always an issue, but quite frankly, I don't want my grandmother to buy $100,000 worth of the latest crypto, whatever, right?
Yeah. Do you want to come? How do you see the regulatory side as someone who deals with taxes, which are part of it?
Yeah, I'm agreed with Adam here. Regulation, it's just the way for cryptocurrency to be a coin, so we can use this. If we are not going through regulation, we will not be able to make it as a coin, as a currency. It will always be an asset that people are investing but cannot really use. So from my point of view, regulation is already here, so the biggest challenge now to face the regulation is actually privacy, is how to protect the one who wants to pay taxes. I know there's not many in here, right? So, but those who won't, how can we protect them from the tax authority wants all the data. The Israeli tax authority, as we all know, are sending letters. It depends when each office has a different is asking for different things, but there are some offices that are asking the public keys, like literally the public keys of the users. So we have to protect them, and the users, I mean, we have to protect them in front of the Israeli tax authority. And this is the solution we are basically working on it right now, is to allow the tax authority to get just what they need and to trust the calculation of the tax, but without any invasion of the privacy, more than they actually do need to.
So before I take it to you, I want to pivot the question a little bit. One of the biggest discussions that I've been seeing in the last, I would say, couple of years in the industry is scalability on the one end versus usage on the other. One side says, there aren't any users because the products aren't scalable enough, and the other side says, there is nothing to do with it, so why should we worry about scale right now? So your product is basically taking smart contracts and putting it on the Bitcoin blockchain, which is something that realistically right now isn't very scalable, as we've seen last December. Where do you find yourself in this debate? What do you think?
Well, for me, the biggest challenge is not about technology, but about education. Everything is, for me, again, is personal opinion. It comes down to communication. We are in a very early stage of a very nascent technology, and we still need to educate people, to let them know what is the value and what is the potential it can deliver. This is not about technology, scalability, regulation. We still need to face that, of course, but how do we make our grandmother to use this? Why do I care? So at least this is why I jumped into the space in the first place. It was like almost three years ago, and the potential, it's amazing, it's huge. What we are doing at RSK by bringing smart contracts to Bitcoin, we're putting the technology at the service of social transformation. The value it can deliver, it's huge, it's humongous. I come from Argentina, from Latin America, where the population is 640 million people. Out of those 600 million people, 65% is outside the financial system, either unbanked or underbanked. So we believe that this technology has the potential to solve that issue, to create a more inclusive financial system. And that is what we're trying to do by building smart contracts. So right now, RSK, our technology, can process 100 transactions per second. And the big question for us is how do we make this an interesting technology to deliver value to 1 billion of people? That is what we are doing right now.
So we are at a Bitcoin conference, and I'm sure that there's no one in this room, maybe besides the professor in the beginning, that would disagree that the one thing that we can basically prove that it's useful right now in the industry is Bitcoin. We know its use case as monetary, as non-censorship, and everything else. But what else in the industry, and that's a very big, arguable question, what else in the industry justifies usage? We are hearing a lot of conversations about blockchain being a solution without a real problem to solve. and a lot of the things around that as well. Aviv, do you want to take that one?
So blockchain definitely has a problem that it solves. It solves a political problem. If for some reason you can't agree on who's going to hold records, just like in Bitcoin's case, you can't agree on who is going to hold the central server where everyone's ledger, right, that holds everyone's account information and the entire ledger, right? So this political problem comes up again in other industries.
Can you give an
fields.
example?
Of course. So if you don't have to stray very far away from Bitcoin as money. If you look at international banks, they're doing wire transfers via hops. One moves money to the other, that moves money to the other. The reason that they do this is because they cannot agree on a single place to hold the records of money, right? This is in different jurisdictions, in different places. So banks are definitely have been the first to look at private blockchains as a way to solve this political problem of cross-border cooperation. Where do you put the data, right?
But banks, they build SWIFT. Let's say how archaic and old it is. Yeah, it works. It takes days or weeks to send stuff, but it works. And it's still one centralized entity that runs everything.
SWIFT is only a messaging system. SWIFT doesn't do anything but send messages between the banks. If you look at where the records are kept, they're actually at computers at the Federal Reserve, right? Or every country has its own central bank. So money is anchored really in many places because it's in many jurisdictions, basically.
So we're still in a transfer of value kind of place in the financial sector.
Right.
Do we have anything outside of that?
Certainly. So you might look at other companies like insurance companies, right? If you're insuring my car, you want to know, for example, that I didn't double insure it, right? I didn't ask for insurance 5 times from 5 different companies. I'm not committing fraud. So it's very useful to have these centralized databases maybe that would hold all of our insurance data. Of course, nobody can agree on who will hold them, where to put them. We have the privacy problem that we've mentioned. So you can do things now with zero-knowledge proofs, for example, to set up blockchains that share all the data, still conceal everyone's identities, and still manage at the same time to prevent fraud. You're not able to insure yourself several times. But I think even just importing blockchains to the world of assets, of stocks, of currencies, we're going to get a lot of that, and definitely there are other things that people have looked at. Insurance is one of them. Maybe another further away from banking is looking at supply chains that people are always talking about. These are all substantial use cases. Every time, just look for this setting where people cannot agree on who is going to hold the data, right? Especially because competitors are on the same system.
Eden, do you have any interesting projects that you're looking at, not necessarily in Israel, but in general, that you see as something that can solve a huge problem in the world?
Well, I think I agree. It's not. The question is a question of trust, right, and ownership, right? So Bitcoin is obvious, but if you look at identity, I think it's even a far larger problem. So generally, just there are less use cases than people claim, but these use cases are worth more than they think, right? So if you look at identity, right now the biggest identity database is Facebook, which is only second or maybe at the same...
Google, probably.
Yeah, exactly, OAuth under Google. So in those both databases, those are both centralized, and to a certain degree, people are not very comfortable with them actually being the centralized authority for identity. So by you actually owning your data and owning the advertising information about you and owning additional attributes that you can then decide on and decide who you expose them to and what will you get in return, that is potentially a huge use case. At Face.com, actually one of the vision before we sold to Facebook was to own the kind of the DNS system for physical space recognition as identity. And at the time, we didn't think about blockchain design at all. We just knew that you cannot let someone else own the access to your face, right? And so you want to disseminate and distribute it. And blockchain would be an ideal platform for that.
One of the things that are commonly discussed as well is the place where smart contracts play in all this, right? Because on the one hand, code is law, and that's a nice thing to say, but when you have law, you need to have enforcement. So if I have a contract and it's in the code and something happens, let's say, a smart contract for my apartment or for something I buy or for work that I do or whatever, and something happens, how can the code enforce it besides, paying a fine or whatever if I put something on stake? Henry.
So going back to your first question before, again, I come from Latin America, and if you look at it like closely, you can mix and match at your own choice. Dictatorship, check. Censorship, check. Capital control, check. Inflation devaluation, check. So for us, it was a no-brainer to jump into blockchain technologies, because this is not about...
It wasn't just blockchain, it was more Bitcoin. Correct me if I'm wrong.
No, they're both, right? Because you were asking about the use cases that it solves.
Yeah.
So it's not only about store of value and transfer of value, it's also about self-sovereign identity, right? We have refugees, we have people fleeing their countries. We have people that they cannot even go to the markets, they cannot even go to voting. So for us, it's not only about transparency, traceability, it's about those building blocks that will make the society or the world a better place. It's about empowering people. It's not about the privacy. There are over 60 billion messages sent by every day, only between Facebook and WhatsApp. Over 250 billion emails sent a day. All that information is being centralized by one single organization, one single company. We have the possibility with this technology to give the power back to the people. So that's what the technology is for us.
And for the smart contract side, how do you see the decentralized world connecting with the centralized world? I mean, one of the biggest challenges that I see right now is basically the friction between the two worlds. We live in a centralized society, until that happens. And the world we're trying to build aims or aspires to be as decentralized as possible. And obviously, when you connect these things as in taxes or in regulation, every transformation from crypto to fiat, we have some sort of friction. And what I asked regarding smart contracts is, how do we get to a place where we can actually trust code-based contracts to do the same for us without the centralized enforcement system that we have today?
Well, probably we are still in a transition. This started for all of us probably as also the title of the conference is, we started as Bitcoin, as public blockchains, right? And we are probably in a transition where we are seeing a lot of different traditional industries jumping into blockchain technologies just because it's cool or it's fancy or it's a really nice buzzword, right? And that is probably, my opinion again, where we started seeing private blockchains. And probably you may argue in favor or cons that that's not a blockchain or whatever, that's personal opinion. But probably I think it was the prior panel, they said that Bitcoin is the source of truth. That's only one, that's the source of truth. That's the only blockchain. That's the truth that it counts. So we are still in this transition where we'll see a lot of different industries getting closer to the technology, probably without a specific need, but they wanted to learn more about it, to try technology, to grasp the benefits. We'll see probably less smart contracts and a lot of blockchain implementations. And then probably we'll move forward to trustless systems. We'll see more smart contracts adoption.
So from what we're seeing today, basically this industry has two sides. It has what we call crypto or digital assets or whatever form, and we have blockchain as a technology. And each of them has different aspirations. Okay, on the one hand, crypto wants to create a new kind of asset. We'll talk about that in a second with ICOs and all the other projects. And blockchains wants to basically digitize or automate, existing processes to do things. So let's put crypto aside for a second, and let's talk about blockchain, as a lot of the interest right now, both from the enterprise sector and the government sector, is towards how blockchain can change or make better a lot of the processes that exist today. What's your take on things, that blockchain as a technology can make better?
So I think maybe the blockchain technology itself does not change anything. Maybe it removes hurdles
I was
that were
waiting for
once
that.
there.
Yeah, thank you.
Right? Blockchain does not let us walk on water. Asking how blockchain will change the world, for me as a computer scientist, is a little like asking, how do binary trees change the world? I mean, you build better systems with it. They have different properties, they have different trade-offs, maybe trade-offs that we couldn't take before. Now we're able to set data and agree on it without a central server. So that's a nice thing. Where does it fit in the business world? We see a bunch of places. I think, like Eden said, they're quite enough. People mentioned, right, identity. I think an identity infrastructure is a revolution, right? Every time we say something about asset transfer, for example, underlying an asset transfer system, there probably has to be some identity system to say, I don't know, use whitelists, blacklists. If you want to deny money going to Iran for some reason, you have to identify Iranians, right? So, I mean, that's just one example.
But the identification process will still be done physically, right?
Right.
So it's still centralized.
And here's the main challenge of blockchains. When we're talking about Bitcoin, we're talking about a digital asset that lives up there, right, in the cloud or the internet or whatever, this digital space. When we want to talk about the world, we have what's known as the Oracle problem, how to make digital records agree with physical records. And part of it goes through the regulator, right? If we decide that I don't know, owning a house is recorded on the blockchain, if courts accept that as the truth, then ownership is on the blockchain.
Yeah, but then what happens if I lose the keys to my wallet? Then I basically lose my house?
Yeah, there have to be processes for this, just like if you have identity theft, somebody steals your identity or your keys, you have to get re-identified by someone physically, probably. So maybe I think
if that's the case, why not just use a database? What's the meaning of having a token, of owning the identity token? If someone can go ahead and reissue that,
right,
no matter what's the process, if someone can reissue that, why it's not just a database with a 1 and a 0 and that's it?
So the question is, when we say there's someone central in the system that can issue, that central someone might not be able to do other things. Maybe it's not able to learn what you do with your identity. Maybe I take an Uber ride and somebody gives me a high rating. Maybe the issuer can't see these things. So cryptography and blockchains allow us a far more nuanced version of privacy and decentralization. Some things like issuance can be centralized. Other things remain hidden. We expose what we want when we want. So when we say privacy, that's a big term, but we really have to see, to talk about who sees what about whom, etc. There are a lot of details hidden behind this, very big banner.
Yeah, so your last question and this question are pretty much tied. So if you think about real estate, yes, the country usually has army, police, etc., in order to enforce certain decisions, and the dissonance by having a digital record on the blockchain and a potentially digital record in the government system is actually a problem, right? And you do see Delaware, for example, willing to issue shares on the blockchain, which is interesting. And then immediately as you read through it, you actually understand that they don't want it to be really on the blockchain and that they actually want to maintain control. But it was a cool thing to say. So I think the key, it might be a bit abstract, but most of the internet, most of large-scale interactions are about risk assumption. So who assumes risk, right? So for example, in the case that you said, I lost my private key, how do I transfer it back to me? the answer is it's now a risk of you being a fraudster. And the question is, who pays for that risk, right? These are chargebacks in, for example, credit cards. So the 2.5% are because there is some risk profile to somebody committing fraud. Same with a real estate registry. If someone is willing to take a $5 million risk in return for being a arbitrator that can reissue a certain key, but then if the reissuance was fraud, then he's hurt, then by doing risk assumption and moving risk around, you can still maintain the decentralization, but have a better solution for it. And that's yet another opportunity of how you manage that kind of risk through the different blockchains and different use cases.
That's the best answer I've heard so far for this question. Thank you. So let's talk on the crypto side for a second. Go back. In the last year, it's more than a year now. We see the ups and downs of the industry caused mainly due to ICOs, which are projects that wanted to utilize this new technology and work their way to raising money through issuing their own kind of money, their own kind of token, which kind of backfired when we realized that this money doesn't have any real value. One of the questions right now rising is what's going to happen next. On the one hand, we are seeing a lot of projects that are building decentralized infrastructure, decentralized apps, a lot of technology being developed in the space. On the other hand, issuing stuff both on the regulatory side, having these things considered securities for like most purposes, and on the purpose of the value side, because owning a token for a project that builds something doesn't necessarily provide value. So what do each of you see as the next stage, not for the industry, but for projects in the crypto space specifically? That's a tough one. Henry, do you want to start?
I think we're seeing I would say the rise of security tokens and the rise of stable coins. I'm guessing that's where you were leading the question. And I personally think that there is a lot to do with those stable coins that, for example, the USDC that Coinbase and Circle have just launched this year or last year could be very, very useful to moving money around and passing those bank issues and or bypassing those bank issues and trying to figure out how cryptocurrency could work using the old monetary system. And so I think stablecoins are probably the next things to be done. And security tokens naturally, which is a grown-up process of the ICO that now the regulation is in the game and started in 2017. I think that's a natural process that it's gone to the security tokens. And it's probable that we'll see that in the next 2 years grow more.
Okay.
I'm just going to relate to what Youval said. I'm going to ask you
just speak
this.
a little louder?
I'm sorry. I'm going to ask you this. But actually, do we need a coin for the banks to know that the money is under regulatory of anti-money laundering? Because when you think about it, related to your last question about blockchain is the most wonderful gift that the banking system could have, and they're running around and they don't even get it, that all of the transactions that you have made are on the blockchain. They can do anti-money laundering by just using the blockchain. They don't need a coin for it. So again, this is raising the questions, what do we need a coin for doing things that we can do on blockchain alone?
So it's a very easy answer. The banks are not there yet, and it will take time for them to get to the point where Bitcoin and other crypto assets will be used, common use, either also for the banks. And I think the stable coins will be one step towards adoption. I'm not entirely sure that 5 years from now or 10 years from now we'll still be seeing stable coins used for those USD or pound or euro. We probably will see that for the next years. I'm not sure if for the long run.
I'll prefix the answer. I think that tokens in general, there are no utility or security tokens. I think it's like Schrodinger's cat. Once you observe it, you can actually say for that use case what it was. So it's probably both, in the sense that when I buy $5 million worth of tokens, I'm probably not going to use them as utility. But when you buy into a specific token because you want to get access to a certain network, then you see it as utility. And so probably it's going to be a safe haven where you can have up to $10,000 purchase and look at this as utility and not require accreditation and etc. So that's kind of a prefix. I think the key thing, if I look at this as an investor, is if you have economic incentive, if you actually have economic design that makes the token be worth more over time through the use of the network, then it's a better both funding as well as operating model than the company or stock model, right? Because you basically can increase the value of that token by making it more useful. So it's superior to the equity model of a company.
But
now,
in the equity model of a company, you don't have just the dividends or revenues. You also have control of the company.
True, and tokens will need to reflect that. So absolutely, but I think the reason I'm saying it's superior is because shares actually only have value because you and I agree on it, while when you look at tokens, the implicit demand created by using the platform actually increases the value of the token. So it's a superior price discovery method than shares. So I'll finish with just saying that the key issue I see with dApps today is actually having tokens depend on Ether. On the value of Ether. So you have highly valuable networks or ones that actually can provide value, but their token is so dependent on the value of Ether, which I think is surprising to most of the people here because everyone thought it's only on the way up. So actually it was a good base for the token, but in reality it's actually now a detriment and an issue inhibiting dApps from issuing their own tokens.
So we really do have to finish, so I'm going to do like a quick roundup, and I'm going to give each of you 30 seconds to say, if crypto, let's say, pessimistic case, in 5 years doesn't happen the way all of us think it will, but if it doesn't happen, what will be the one reason that it won't? 30 seconds.
Okay, so I think if crypto doesn't happen, the reason will be that we clash with regulators. There's a good chance that somebody will do a 9/11 style attack. He'll pay for the cab, as they say, with bitcoins, and the government will crack down. I will say that there is a lasting effect that is for sure going to be there, which is kind of like a Napster effect, right? If we don't have file sharing as a pervasive phenomena anymore, but iTunes was born because of file sharing, and Netflix was born because of file sharing. So this disruption is going to be there anyway.
Okay. Eden?
Yeah, I agree with that basic notion in which the cat is out of the bag, so the technology stack exists, and the question is like evolution. Innovation in many ways is like evolution, where it might not be Bitcoin providing the value, it might not be Ether. Right now you actually have a benevolent ruler of Ether, which then makes it move faster. But if they, and they will integrate anywhere from zero knowledge proof in my mind to scalability. But if they fuck up, then the next blockchain will actually take over and integrate whatever solutions there are. So it might
what's
not,
that one thing? The one thing that's gonna break crypto, if there is one, to your opinion?
Yeah, very, very simply, is that it will constantly change to whatever platform provides the most value, but it might not be the platform we know today. That's basically
So
because
people will lose trust along the way.
Yeah, so either lose trust or like Bitcoin Cash. There are enough examples in the Bitcoin
definitely.
blockchain of how to screw up.
Definitely. Oh.
So I know everybody here thinks that taxes will kill it, but here we are paying taxes on Bitcoin and we are still here. So I think we are pretty much a group of believers. This is not the wild use and the worldwide adoption that we are talking about.
One thing that's going to crash.
So the one thing is going to crash it, and it's not going to be, my mother is not going to buy Bitcoin, right? This is the technical issues of opening a wallet, of Bitcoin transaction. This is what's going to be the most challenging thing for Bitcoin.
Usability.
Yeah.
Okay.
So I would agree with Eden. I think trust would be the one factor that might take us off the good road to crypto adoption. But this is only because I need to choose one. I don't think we see a scenario that crypto isn't here in 5 years.
Obviously, we all don't think.
I would say the usability as well. If we don't make Bitcoin and cryptocurrencies as easy to use as Skype, we'll fail for sure.
Okay. The only reason, by the way, that I chose to finish with this question is that all of you will know what are the main challenges you need to work on for this to still exist and prosper in 5 years. I want to thank you, everyone, for joining us. You all are now going out for a lunch break, and you'll come back soon. Thank you.